Howdy y'all, I hope you've had a great day. Silver Trade here again with another video. We've been robbed again, literally by Bybit. Today we're going to talk about why GameStop is a way bigger deal than anybody realizes. On February 21st of 2025, exactly one FINRA margin call, T plus 15 plus C14 Rex 068 extension from January 15th, the day Hindenburg Research, a short seller, closed. And on the same day, January 15th, FTD data for GME, XRT, and Pet Merch Company were all missing. Y'all remember us talking about this when the FTD data was literally gone. February 21st of 2025 was 35 days after January 17th. They're having weird 8 p.m. ET thumps on GME where at 8 p.m. ET a single share is traded far from the current price and trading immediately pops back to the normal or controlled level. January 17th was a Friday with no overnight trading at 8 p.m. Instead, overnight trading opened at January 20th at 8 p.m., where we see the thump, which introduces some ambiguity on whether to count from January 17th C plus 35 on February 21st or January 20th C plus 35 equals February 24th. Either way, something interesting should be happening in between February 21st and February 24th. Obviously, nothing has happened yet. February 21st, 2025 was 35 days from January 17th options expiration, which are particularly interesting because unusual whales alerted explosive bullish premium on GameStop January 17th of 2025 calls back on September 27th of 2024. Someone expected something exciting, but GME was somehow suppressed, presumably by naked short selling with the rule of C plus 35 delivery deadline. Still, those calls were in the money and thus a good portion likely assigned the next trading day. Here's a crayon drawing of all that was insane with the 8 billion cat equity errors leading up to the January 15th margin call. On the same day that 8.5 billion cat errors were reported, Citadel came out and sold $500 million in junk bonds. 2 days later, Citadel had sold about $1 billion of their junk bonds, while Hindenburg Research was closing. What happens on the day those C plus 35 margin call deadlines hit? $1.5 billion stolen in a crypto hack on February 21st of 2025, the biggest crypto hack in history. The day that $1.5 billion was stolen from Ethereum was 35 days after the margin call deadline. And if you think that is a stretch, in July of 2024 is also the month when the global computer outage of July 19th coincidentally occurs right at the end of C35 delivery deadline for Roaring Kitty's 4 million GME shares purchased on June 13th. July 19th is the only time in history CrowdStrike has gone down, and that just so happens to be, once again, 35 days after a GameStop event. Please remember, none of this is financial advice and we are not financial advisors. This video is made for entertainment purposes only. And we're going to talk about this more in just a little bit, but back in 2020, there was more than 4 times the amount of GameStop even available sold to people. So it was 4 times oversold. And GME on the chart, it fell below the midline and it's below the 200-day moving average on the weekly. Really doesn't look great for GameStop. But until GameStop comes all the way down to $20 per share, the chart still looks really good. It had a much larger bounce off the 200-day moving average back here than it has right here, showing that it's really bullish. We talk about that $25 price level quite a lot. And when you look at the daily RSI, you can really see where GameStop lost its momentum. On the 4-hour, we can see that GameStop's trying to retest that line. GameStop could definitely go below the 200-day moving average, but I believe that it's got very strong support at the $25 level. Earnings is on March 25th, but that hasn't been announced yet, but it's around March 25th, and that is supposed to be pretty good for Q4. And while the whole world is starting to talk about crypto, GameStop is talking about buying Bitcoin as well. Them buying Bitcoin is going to make it a lot more risky for companies to short them. If GameStop buys enough Bitcoin, shorting them could be like shorting Bitcoin. And obviously that's been a very bad idea throughout most of history. GameStop. More than likely, GameStop is just here at the 200-day moving average to collect some liquidity before its next leg up. That will certainly be higher. The RSI is almost as cooled off as it was when GameStop was at $10 per share. And on the weekly, you can really see how the RSI has just slowly moved up over time. Looks like the RSI might have a new local bottom right below the 50%. Very exciting. Last time that GameStop was above the 200-day moving average and touched it, over the next 2 weeks, it ran 400%. Thank you so much if you made it this far in the video. Please leave a like. I really appreciate every single one of y'all. The rest of this video is just going to be a timeline about GameStop starting back in 2019, and that might be my next couple of videos as well. In June 2019, official data from the regulatory body, FINRA, showed that GME's short percentage had suddenly increased from 45 to 70% in 1 month. At the time, on June 7, 2019, Keith Gill, who called himself Run Kitty on YouTube, started buying GME in July. The short percentage increased from 80% to 121%. There were now more shares on loan than existed. That same fall, investor Michael Burry bought 3 million shares and criticized GameStop's management. GME's short percentage flew from 136 to 270%. On July 28th of 2020, Gill explained his thesis that GME was extremely undervalued and how he believed in Ryan Cohen. In October of 2020, when GME was down around $4 per share, GME was 309% short. The combination of Burry, Gill, Cohen, and the sky-high short percentage started an expectation on Reddit about the mother of all short squeezes, MOASS, a term used by investor Carl Icahn against a short. Cohen joined the board, GME accelerated steadily, and the short percentage on FINRA rose to 313%. The data channel Bloomberg Terminal showed that the large institutions owned 180% of GME, and that they had owned over 100% of GameStop since at least 2010, a clear sign of naked shorting. 8 million people followed Gill's example. Buy and hold short seller on Wall Street were trapped. But on January 28th of 2021, when GME exploded to around $500 and seemed to fly to the moon, position close only was introduced at hundreds of brokers. For 3 hours, you could only sell GME. The share price plummeted to $40 per share at Robinhood. The ban on buying continued for a week. At the same time, the original Reddit forum where retail investors met were shut down, and the data banned S3 Partners changed its calculations so that short percentage above 100% could not be displayed. You know, it's funny, whenever Roaring Kitty host a live stream and GameStop is just flat, they will halt GameStop 40 times in a day. But if it's falling from $500, there's not going to be one halt. Thomas Petterfly, the chairman of Interactive Broker, explained why the buy button had been removed. It was a matter of survival. If the short squeeze had happened, the stock would fly to infinity.
Let's just start with this simple question. How close we were to this system breaking, something failing? How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares, while only 50 million shares existed. So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest.
Shortly before the buy button was removed, a retail investor was actually able to sell GME for $5,000 per share. According to Petterfly, the entire trading chain was close to a domino collapse. Petterfly ended with a quote that would later become a rallying point. He said, "If longs had known that they had the right to ask for their shares and they really wanted a short squeeze, that's what they would have done." Yeah, but there was no buy button. Gary Gensler, the chairman of the SEC, which regulates the stock market, said, "It does concern me that retail investors were shut out during a fateful time, but again, there's balance. They had to protect the clearinghouse as well." Why would retail have to protect the clearinghouse as well? Gensler pointed fingers at the DTCC, the Depository Trust and Clearing Corporation, which is supposed to guarantee that all purchases and sales are real and cover bankruptcies and trading chains. Later it turned out that the unknown market maker mistakenly noted that Apex, a major clearinghouse under the DTCC, was short $385 million. This increased the risk of bankruptcy and caused the DTCC to remove the buy button just when the little man seemed to be winning the corrupt game the system chose to save itself. They've got to be running out of rope. On February 18th of 2021, Robinhood CEO and Ken Griffin, Citadel CEO, were called in a congressional hearing. All acquitted, Gill concluded by saying, "I'm not a cat, I like the stock," and doubled his position on April 16th. He doubled down again and left the spotlight with 200,000 shares. Gabriel Plotkin, the chairman of hedge fund Melvin, was also at the hearing on January 25th. Melvin received $2.75 billion from hedge funds Citadel LLC .72 to avoid margin calls. Shortly before, the SEC allowed Melvin to hide short positions from its quarterly report. Plotkin underplayed the report to make Melvin look strong, and in March the focus shifted to sudden bankruptcy of the hedge fund Archegos. In June 2022, the Congressional report GameStop was released. On page 47, it says black and white that Robinhood and Citadel Securities engaged in blunt negotiations the night before trading restrictions to lower the PFOF rates Robinhood was charging Citadel Securities. This is in direct contradiction to what CEO of Robinhood, Tnev and Griffin said during the congressional hearing. On page 48 also showed an email Tnev wrote on January 27th. "Maybe this would be a good time for me to chat with Ken Griffin." Robinhood and Citadel Securities coordinated up to January 28th. Tnev and Griffin presumably lied under oath.
For 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, members of the committee. My name is Vlad Tenev, and I'm the Chief Executive Officer and co-founder of Robinhood. Thank you for the invitation to speak about Robinhood and the millions of people we serve. Almost 8 years ago, Baiju Bhatt and I founded Robinhood. We believed then, as we do now, that the financial system should be built to work for everyone, not just a select few. We dreamed of making investing more accessible, especially for people without a lot of money. The stock market is a powerful wealth creator, but nearly half of U.S. households participate in it.
Mr. Staff, I would like you to use your limited time to talk directly to what happened January 28th and your involvement in it.
Certainly.
Madam Chair, the witness has the opportunity to give their own testimony.
Excuse me, you are
Use
not
your time for your questioning.
You are not recognized, Mr. Please go right ahead and speak directly to the question.
McHenry.
Mr. McHenry, yes, of course.
We created Robinhood to economically empower all Americans by opening financial markets to them. I was born in Bulgaria.
In addition, Elite's conversation revealed that Tnev got the DTCC to reduce Robinhood's margin call risk. It should be briefly mentioned that payment for order flow, PFOF, is a problem. It allows brokers like Robinhood to make money by sending investors order to market maker, who can send them back to dark pools, a kind of shady exchange where orders do not affect the market. We've talked about this before. 90% of all orders don't even hit the lit market nowadays, and that is certainly a problem. According to Congressional reports, the bank Charles Schwab, the bank Interactive Brokers, TD Ameritrade, and E-Trade, and the two clearinghouses Apex and Axos should have been questioned. Market makers Wolverine and brokers Wedbush and Vision were problematic. However, the dark pool Instant was by far the biggest problem. Since 2019, the DTCC canceled 90% of Instant's margin calls, a total of $50 billion. Why would the DTCC cancel $50 billion of margin calls in the last 5 years? Instant's owner, the Japanese bank Noruma, is also interesting. In 2019, Noruma was given $3.7 trillion by the Fed, the major U.S. banks, the largest loan in a single bank ever. Last year, America spent $6 billion on homeless veterans, and in 2019, we gave $3.7 trillion to a Japanese bank. In 2022, the SEC sued Barclays for overselling $16 billion worth of stock since January of 2021. Oh my goodness. 14 other institutions were also charged, including Bank of America, Credit Suisse, Deutsche Bank, Goldman Sachs, Morgan Stanley, and Noruma. The overselling allowed loans of phantom stock to numerous short sellers. At the same time as the lawsuit, the SEC allowed unstable players to use capital of U.S. insurance companies and teachers' pensions to avoid margin calls and thus to pay the potential bill. I'll have this whole post in the description. On February 24th, shortly after Gill increased his position, GME exploded to $250. At the same time, FINRA changed their calculation on GME's short percentage to make it seem much smaller. On March 10th, GME plummeted again. In the financial media, MarketWatch published an article about GME falling. This is the article that people are always talking about that came out before GameStop ever started falling. MarketWatch article indexed by Google 10 hours prior to the stock going down to $200 per share. During the spring of 2021, short position of approximately 100 million GameStop shares disappeared from a large number of short sellers' quarterly reports. However, GameStop had issued 77 million shares in the market. It had previously been shown that the position of 110 million shares were opened at the end of January, creating phantom shares that caused the short ratio to drop from 226% down to 30%. On March 31st, short position for 110 million shares were actually found on a Bloomberg terminal. Please pause if you want. This is equivalent to 143% of GameStop, like from the song.
140% of GameStop was short. GameStop was short.
The positions were in the names of two Brazilian banks. The risk had been moved offshore so the SEC couldn't keep up. However, Brazilian institutions shouldn't be able to hold short positions at a Bloomberg terminal, so everybody just saw the 143% as a bug. On March 29th, just 2 days before Bloomberg's bug, Credit Suisse took out $13 billion worth of swaps for bankrupt hedge fund Archegos. On June 30th, Bloomberg showed that Credit Suisse was short 70% of GameStop. The next day, the position was sent to the Brazilian funds. On October 2021, the SEC's report of GameStop showed that investors did not sell and short sellers did not buy back shares between January 19th and February 5th, so there never was a squeeze. In 2012, a lawsuit revealed that the firm Understock had tons of FTDs, created by banks brokers such as Goldman Sachs, UBS, Morgan Stanley, Citigroup, Credit Suisse, BNB, BNY Mellon, and JP Morgan in a profitable collaboration. In an internet email from 2005, the president of Merrill Lynch, who was also implicated, had written, "Fuck the compliance." As there is very weak legislation on mandatory buy-ins, forced delivery of FTDs, the banks didn't care about what little law there was. According to Gensler, chairman of the SEC, over 90% of all orders from brokers are sent through dark pools and the OTC market.
95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange, they go to wholesale.
These markets are mainly handled by dark pools, Instant, owned by Noruma, and the three U.S. market makers, Citadel Securities, the largest U.S. banks, Virtues, and G1. However, when a stock has too many FTDs for 5 consecutive trading days, it goes on Reg Show list. If the stock stays on the list for a total of 13 trading days, shorting is now restricted and the FTDs from the 6th and 13th trading day are forced to close. At least that's how it's supposed to work. Share registration is also known as DRS. DRS imitates the old paper form of shares had until 1999, when they became digital and held at the DTCC. GameStop and 16,000 other companies use ComputerShare depository for their registered shares. It is easy to register shares, but DRS is still unknown among retail investors because, according to SEC rules, stock firms are not allowed to promote DRS. What the heck? In 2003, a number of companies complained to the DTCC that their stocks were being diluted by naked shorting and that they wanted to withdraw their stocks from the DTCC system. So they quickly got the SEC to change the rules so that the stock firms could not encourage DRS. The DTCC knew that the public knowledge of naked shorting and DRS would be a dangerous cocktail, so the individual investor must discover DRS by chance. Even if a broker has traded honestly in the markets, all unregistered shares are ultimately held by the DTCC. Only registered shares are truly yours, and as a bonus, they cannot be borrowed or shorted. In addition, DRS guarantees voting rights at annual meetings, etc. Also, it's notable that stock companies are not allowed to publish voting percentages above 100%. This could easily prove naked shorting. Thank you so much if you made it to the end of this video. I hope this video wasn't too long. Please be patient, this is a winning fight. Thank you guys so much, and God bless.